Now check in on the local unit, the Australian dollar, and see how it is faring. A bit of a rebound in the session overnight, pushing towards that 72-cent mark after it did trade down to lows of the 71 handle. Well, let's now get a read on all of the day's currency plays and the economic outlook. Clifford Bennett from ACY Securities joins us now live. Clifford, great to have you on. Look, a bit of volatility for the local unit, which is always good.
I was just saying, someone to speak to. It's fantastic. Look, the US dollar is having a bit of a pullback because most people expect the Jackson Hole meeting of this Friday, which, by the way, is a virtual event. So it just goes to show at high levels, people are very concerned about the Delta variant, that it's most likely that Chairman Jerome Powell will say something quite soft, given the surge in the Delta variant. Now, a lot of people in the market are wanting to look the other way and pretend that the surge in the Delta variant isn't happening because it is tricky for the central bank with the rise in inflation, which we forecast well ahead of most, I think, being sustained for a longer period of time. There may be some acknowledgement of that, but I think he's going to move very cautiously and generously on the front of when tapering will occur. He will say, though, I think, that tapering has to occur this year, starting in the months ahead. But he won't be aggressive at this point in time, particularly what's happening in Texas and Florida at the moment. They're running out of ICU beds now and oxygen, and in a US state, that's a big deal. So in that sort of general press environment, I don't see the chairman as being particularly aggressive on the interest rate outlook or the tapering outlook. And so people in the market are very much, both in equities and currencies, positioning for that kind of outcome at the end of the week already.
So you think this move in the Australian dollar then is a US story, not the backdrop of what we're seeing here locally? I mean, given the fact that you are calling a recession in Australia now.
Yes. Well, I call it my ausbiz forecast, Cara. I was on ausbiz at 77.45 when I said the Aussie was going to 70 cents. And we're still on track for that. This is just a bounce this week for some currencies against the US dollar, and it may not even survive as long as the actual Jackson Hole event itself. It's just a little bit of a pullback in the US dollar, a little bit of bounce in currencies generally. It isn't Australian specific driven at all. There's no good news about Australia, unfortunately, at the moment. We are definitely already in a recession. Now, some people might want to wait until the data has already come out in 3 months' time, 6 months' time, to confirm that there's a recession we're living in. But I think most of us already acknowledge that. And I think the risk to the recession forecast is that it's a protracted recession, not that we don't get the recession call right. We could drift into negative growth in Q1 as well. I think the damage being done by the current lockdown, sadly and tragically for many Australian families, is now at the point of being long-term economic damage and wealth damage. And we won't be seeing the surge in comeback that we saw last time. So there's not a lot of good news for the Australian dollar. We know that China continues to make statements at various divisional levels that it is going to pull itself away from relying on Australia for iron ore. Iron ore prices are well down. The outlook for our exports is not good, except in agriculture. Agriculture remained very strong. Our commodity exports generally will remain strong, but not as strong and not as good prices. So on both the export sort of perspective of the Australian dollar and the domestic economic perspective, things do not look good, and I don't think we have priced in that kind of outcome yet. So the target's 70 cents, but the risk is probably 68.50.
Clifford, where's the gold play in all of this? Last week we saw some of those big US gold miners take a bit of a tumble, despite the fact that we did see a consolidation in that gold price. What do you see when it comes to price action going forward?
I think a lot of people are already long a lot of those stocks, and given that the broad market is underperforming at the moment, you can't argue that the Australian stock market is strong at the moment. It's not keeping up with the US market. It's a very heavy market. It might have a bounce today. I think that's a hedging opportunity. If you have a sort of stretched investment portfolio at the moment, you might want to wind some of that back on this rally this week, again Jackson Hole related. But the Australian stock market's severely underperforming. That would have affected those gold stocks as well, given their pre-established positioning. But gold, I'm extremely bullish. So those stocks may come back into play very, very soon. I see the price of gold going to US dollars 2,500. Would be bullish gold for the being long gold, I favour over being short Aussie stocks at the moment. But I think caution over the Australian stock market, whilst hedging what's happening around the world with Delta and inflation by being long gold, is going to become a flavour of the month story in the next several weeks or so. So I'd be keeping a keen eye out for gold. We've seen that gold can strengthen in the face of a stronger US dollar. So any sort of hesitation in the US dollar certainly allows gold out of the traps, if you like. And I think that upward movement will be maintained regardless of what happens on Friday with regards to any comments Jerome Powell may make.
Clifford, sounds good. Great to check in with you this morning. Thanks so much for joining us.
Thanks for the chat. Yes.